Preparing for FP&A Analyst at SoftBank interview? You've reached Candy Mentor, and this video is for you. We'll walk through 25 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does FP&A contribute to a company like SoftBank? FP&A turns financial information into decisions. At SoftBank, I would help consolidate forecasts across operating businesses, investment vehicles, and corporate functions, explain variances, and provide management with a clear view of earnings, liquidity, and capital requirements. The role is not simply reporting historical results. It involves challenging assumptions, identifying risks, and translating portfolio or business performance into actionable recommendations. Strong FP&A ultimately improves resource allocation, forecast credibility, and accountability across the organization. While answering, focus on budgeting, forecasting, performance analysis, management reporting, investment company complexity, decision support, and how FP&A connects financial results with strategic priorities and capital allocation. Question 2. Why do you want to work in FP&A at SoftBank? SoftBank appeals to me because it combines technology, investing, and complex financial reporting. FP&A there would require more than building a standard operating budget. I would need to understand portfolio movements, operating company performance, funding decisions, and management priorities. That combination suits me because I enjoy linking detailed analysis to strategic questions. I also see the role as an opportunity to develop stronger forecasting, business partnering, and executive communication skills in a highly dynamic environment. Make sure to cover SoftBank's technology focus, diversified investment platform, analytical complexity, interest in forward-looking finance, communication skills, and how the role fits your long-term development. Question 3. Walk me through the budgeting process you would use. I would begin with SoftBank's strategic objectives and establish key planning assumptions, such as revenue growth, investment activity, personnel costs, financing costs, and foreign exchange rates. I would then collect bottom-up submissions, test them against historical trends and business plans, and challenge unsupported assumptions. After consolidating entities, I would prepare base, upside, and downside scenarios for management review. Once approved, the budget becomes a benchmark, but I would refresh forecasts as conditions change rather than treating it as static. In your answer, talk about strategic targets, bottom-up inputs, assumptions, ownership, review cycles, consolidation, challenge sessions, scenario analysis, approval, and ongoing monitoring after budget sign-off. Question 4. How would you build a rolling forecast? A rolling forecast continuously extends the planning horizon as each reporting period closes. I would replace the oldest forecast period with actual results, add a new future period, and update operational drivers rather than merely applying broad percentage changes. At SoftBank, drivers could include portfolio activity, operating revenue, headcount, expenses, financing, and currency assumptions. I would compare forecast changes with prior versions, document causes, and provide base, downside, and upside views when uncertainty is high. Be sure to mention forecast horizon, actuals replacement, driver-based assumptions, business owner input, scenario ranges, variance review, model controls, and how frequently management needs updates. Question 5. How do you analyze a budget to actual variance? I first quantify the variance and determine whether it is favorable or unfavorable. Then I separate timing, volume, price, mix, foreign exchange, and one-time effects, because the same dollar variance can have very different implications. I would speak with the responsible business owner, validate the explanation against supporting data, and assess whether the issue affects the full-year outlook. My report would distinguish temporary noise from structural changes and recommend an action, owner, and expected resolution date. Focus on identifying the variance, separating price, volume, mix, timing, and foreign exchange effects, distinguishing controllable from uncontrollable items, validating explanations, and recommending corrective action. Question 6. What KPIs would you monitor for SoftBank's businesses and investment activities? I would use different KPIs for operating businesses and investment activities. Operating metrics might include revenue growth, EBITDA margin, cash conversion, subscriber or customer trends, headcount, and retention. Investment-related measures could include capital deployed, realized proceeds, valuation changes, portfolio concentration, liquidity, and return indicators such as IRR or multiple of invested capital. I would avoid presenting metrics in isolation. The key is connecting them to strategic objectives, forecast changes, and cash requirements. Mention segment-specific metrics, revenue and EBITDA trends, cash generation, capital deployed, valuation movements, returns, liquidity, leverage, operating efficiency, and the importance of selecting decision-useful measures. Question 7. How would you forecast revenue for a technology or investment-related business? I would build revenue from operational drivers rather than applying a single growth rate. Depending on the business, that might mean customers multiplied by average revenue, units multiplied by price, or expected investment exits multiplied by transaction timing and proceeds assumptions. I would benchmark assumptions against historical performance, market conditions, management guidance, and comparable businesses. Finally, I would run sensitivity analyses around volume, pricing, timing, and foreign exchange, because small assumption changes can materially affect consolidated results. In your answer, cover driver-based modeling, customer or asset-level assumptions, market growth, pricing, volume, transaction timing, management input, historical validation, and sensitivity analysis. Question 8. How would you forecast expenses and headcount? I would separate expenses into headcount-related, committed, variable, and discretionary categories. For personnel costs, I would model opening employees, hires, departures, average salary, bonuses, benefits, and hiring timing by function. Non-payroll expenses would reflect contracts, usage drivers, inflation, and planned initiatives. I would reconcile the forecast to approved headcount plans and procurement commitments, then compare monthly actuals with run rates. That approach helps identify both overspending and delayed investment before they affect the annual outlook. Make sure to cover headcount drivers, compensation timing, hiring plans, non-payroll costs, committed versus discretionary spending, inflation, accruals, and reconciliation to approved strategic plans. Question 9. Explain the difference between a forecast, budget, and long-range plan. A budget is an approved operating commitment for a defined period and provides a performance baseline. A forecast is the latest estimate of what is likely to happen, incorporating actual results and new information. A long-range plan looks several years ahead and links financial outcomes to strategic choices, capital allocation, and growth objectives. At SoftBank, I would ensure all three use consistent definitions and drivers, while recognizing that their assumptions and refresh cycles serve different management needs. Focus on purpose, time horizon, refresh frequency, level of detail, accountability, strategic use, and how the three planning tools should remain internally consistent without serving identical purposes. Question 10. How would you analyze cash flow in an FP&A role? I would reconcile operating profit to operating cash flow, then separately analyze working capital, investing activity, financing flows, and liquidity. For SoftBank, I would pay particular attention to investment commitments, proceeds, debt maturities, interest, dividends, and cash held across entities. I would build a monthly cash forecast with expected receipts and payments, compare it with available liquidity, and stress test downside cases. The objective is to identify funding needs early, not simply explain cash after the fact. Be sure to mention operating cash flow, working capital, investing activity, financing flows, liquidity forecasts, committed obligations, scenario analysis, and the distinction between accounting earnings and cash availability. Question 11. How can an investment company show accounting profit while cash flow is weak? Accounting profit and cash generation can diverge substantially. An investment company may record unrealized valuation gains or other non-cash income, while cash remains tied up in portfolio assets. Conversely, cash may be received from an asset sale without creating equivalent current period earnings, depending on carrying value and accounting treatment. I would reconcile net income to cash flow, isolate non-cash items, review timing and working capital effects, and present management with both earnings and liquidity perspectives. In your answer, explain non-cash valuation gains, unrealized investment movements, working capital, timing differences, debt service, asset sales, and why FP&A must reconcile earnings with liquidity. Question 12. How would you incorporate foreign exchange into a SoftBank forecast? I would first map each entity's functional currency, revenue and cost exposures, and relevant balance sheet positions. Then I would establish approved forecast rates and apply them consistently, distinguishing transaction effects from translation effects. I would show constant currency performance separately from reported performance so management can see underlying operating trends. Given SoftBank's international exposure, I would add sensitivities for major currency pairs and coordinate with Treasury on hedging assumptions, avoiding any unsupported claim that hedging eliminates all volatility. Mention exposure mapping, transaction and translation effects, forecast rate methodology, sensitivity analysis, hedging information, entity currencies, consistency, and separating operational performance from currency movements. Question 13. How would you explain SoftBank's results to senior management? I would lead with the conclusion: what changed, why it changed, and what management should do next. A concise bridge could separate operating performance, investment valuation movements, foreign exchange, financing costs, and one-time items. I would distinguish reported earnings from cash implications and identify whether each variance is temporary or structural. Supporting pages would provide detail by segment or entity, but the executive summary would remain focused on outlook, risks, liquidity, and decisions requiring attention. Focus on concise messaging, headline drivers, bridge analysis, operational versus valuation effects, cash implications, risks, outlook, and tailoring detail to executives' decisions rather than overwhelming them with data. Question 14. Describe a time you found an error in a financial model or report. In one reporting cycle, I noticed that a forecast margin improved sharply despite no corresponding operational change. I traced the issue to a formula that excluded several months after a range was edited. I rebuilt the calculation, compared it with the source schedule, quantified the impact, and alerted my manager before distribution. We corrected the report and added a range check and variance threshold to the review process. The experience reinforced that analytical judgment and basic model controls must work together. While answering, use a clear situation action result structure, explain the control or analytical clue, describe root cause investigation, quantify impact, communicate appropriately, and mention preventive improvements. Question 15. What controls would you use to ensure forecast accuracy and reporting quality? I would use standardized templates, controlled input tabs, clear ownership of assumptions, and documented submission deadlines. Before consolidation, I would reconcile source data, check period mappings, review formulas, compare totals with the general ledger, and investigate unusual movements. Version control and locked formulas would reduce accidental changes, while sign-offs would establish accountability. I would also retain an audit trail for manual adjustments and use variance thresholds to focus review effort on financially meaningful exceptions. Mention standardized templates, source data reconciliation, version control, formula checks, sign-offs, access controls, variance thresholds, audit trails, and clear ownership for assumptions and adjustments. Question 16. How would you consolidate forecasts from multiple subsidiaries or portfolio companies? I would begin with standardized definitions, chart of accounts mappings, reporting calendars, and submission templates. Each entity would provide its forecast with supporting drivers and local assumptions. I would convert currencies using approved rates, eliminate intercompany items, apply appropriate ownership or consolidation treatments, and reconcile submissions to prior periods and source systems. Outliers would be discussed with local finance teams rather than overridden centrally. A final review would assess aggregation, eliminations, and whether consolidated trends make economic sense. In your answer, cover consistent chart of accounts, reporting calendars, currencies, intercompany eliminations, ownership percentages, data validation, local assumptions, consolidation adjustments, and review of outliers. Question 17. How would you evaluate an investment or strategic initiative from an FP&A perspective? I would assess both strategic fit and financial consequences. The model would identify incremental revenue, operating costs, capital requirements, funding effects, tax considerations, and timing of cash flows. I would calculate relevant returns, such as NPV, IRR, payback, or value creation, while presenting downside and upside cases. I would also consider opportunity cost and execution risk. After approval, I would compare actual performance with the investment case so lessons improve future planning and capital allocation. Be sure to mention strategic rationale, incremental revenue and costs, cash investment, risk-adjusted scenarios, return metrics, opportunity cost, sensitivity analysis, and post-investment performance tracking. Question 18. What is scenario analysis, and how would you apply it at SoftBank? Scenario analysis evaluates how different assumptions affect outcomes, rather than pretending one forecast is certain. I would identify the variables with the greatest impact, such as investment valuations, exit timing, foreign exchange, interest rates, operating growth, and funding costs. I would build coherent base, upside, and downside cases with linked assumptions, then show effects on earnings, cash, liquidity, and capital requirements. The analysis becomes useful when it also defines trigger points and management actions for each case. Focus on uncertainty, key value drivers, base, upside, downside cases, linked assumptions, probability or sensitivity views, management actions, and avoiding false precision in volatile investment environments. Question 19. How would you work with accounting when reported results differ from management expectations? I would first reconcile the management forecast to the reported results at a detailed level, including accruals, reclassifications, eliminations, valuation movements, foreign exchange, and timing differences. I would discuss judgmental items with accounting and review the relevant policy or supporting documentation. My goal would not be to force accounting results toward the forecast, but to explain the difference clearly and improve future assumptions. I would document agreed adjustments while preserving a transparent bridge between statutory and management reporting. Mention reconciliation, accounting policies, accruals, valuation movements, eliminations, timing, judgmental items, respectful challenge, documentation, and preserving the distinction between generally accepted accounting principles or international financial reporting standards reporting and management views. Question 20. How would you assess the impact of interest rates on SoftBank's plan? I would map debt and cash balances by currency, maturity, and fixed or floating rate, then quantify the direct effect on interest expense and income. I would also consider indirect effects. Higher discount rates can pressure asset valuations, while tighter financing conditions may affect exits and capital availability. I would model rate sensitivities across earnings, cash flow, liquidity, and leverage, coordinate with Treasury on hedging and refinancing assumptions, and distinguish contractual exposure from broader market scenarios. In your answer, cover floating rate debt, refinancing, interest income, valuation multiples, discount rates, currency effects, liquidity, sensitivity tables, and coordination with Treasury and investment teams. Question 21. How would you prioritize competing requests from senior stakeholders? I would rank requests by decision impact, deadline, materiality, and dependencies. A liquidity forecast needed for an imminent funding decision would generally take priority over a lower impact presentation refinement. I would clarify the required output, audience, and level of precision, then communicate realistic timing to each stakeholder. Where possible, I would provide an initial directional answer followed by deeper analysis. I would not sacrifice control quality, instead, I would narrow scope or escalate conflicts early. Make sure to cover urgency, decision impact, deadlines, materiality, dependencies, data availability, transparent communication, expectation management, and maintaining accuracy while handling multiple priorities. Question 22. How do you communicate a forecast that senior management may not want to hear? I would communicate the conclusion directly and support it with evidence. For example, I would explain that the outlook is below plan because volume assumptions weakened, show the quantified effect, and distinguish confirmed information from judgment. I would include sensitivity ranges and practical responses, such as reducing discretionary spending, adjusting hiring, or revisiting timing. Respectful challenge is part of FP&A's value. I would remain objective, avoid overstating certainty, and ensure management understands both the risk and available choices. Focus on objectivity, evidence, concise framing, root causes, implications, alternatives, sensitivity analysis, respectful challenge, and presenting solutions rather than simply delivering negative news. Question 23. Which Excel or financial modeling tools do you use most effectively? I use Excel for driver-based models, including XLOOKUP or index match, SUMIFs, pivot tables, scenario switches, and sensitivity tables. I structure models with separate assumptions, calculations, outputs, and checks so another analyst can follow the logic. For larger datasets, I use Power Query or SQL where available to reduce manual manipulation. I also document sources and assumptions, reconcile outputs, and test edge cases. I would be comfortable learning SoftBank's planning and reporting systems quickly. Be sure to mention relevant functions, pivots, data validation, scenario tools, model structure, automation, error checks, documentation, and willingness to learn systems used in the target team. Question 24. How would you improve an inefficient monthly reporting process? I would map the process from data extraction through final distribution, quantify time spent, and identify recurring manual steps, rework, and control risks. I might standardize source files, automate repetitive transformations, create a centralized assumptions table, or introduce validation checks before consolidation. I would test the revised process with users, compare outputs to the existing report, and document responsibilities. Success should be measurable through shorter cycle time, fewer errors, and more analyst capacity for interpretation. In your answer, discuss process mapping, root cause diagnosis, standardized data, automation, materiality, control preservation, stakeholder testing, measurable time savings, and continuous improvement. Question 25. What would you do in your first 90 days as a SoftBank FP&A analyst? During the first month, I would learn SoftBank's segments, investment structures, reporting calendar, systems, definitions, and key stakeholders. In the second, I would own recurring tasks under supervision, reconcile outputs, and understand how forecasts feed management decisions. By the third, I would independently deliver a dependable analysis and propose one practical improvement, such as automating a recurring reconciliation. I would prioritize accuracy and relationships first, then expand my contribution as my understanding of the business deepens. Mention learning the business model, reporting structure, systems, key stakeholders, calendar, definitions, recurring deliverables, control requirements, and one achievable process improvement supported by evidence. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.